Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So let's try to make some sense of what the heck's been going on over the past 5 to 10 days. Kind of a perfect storm, I guess, of a bunch of things, the least of which were technical, but there were some signs, certainly. I don't think anybody, and I mean anybody, was expecting the swiftness that this sell-off has occurred. It is simply breathtaking. And a big part of the swiftness has been this China potential actual non-FUD FUD. And if you're curious as to what some of the news around China has been, this Wu blockchain Twitter account's really good at highlighting the Chinese stuff. And just like everything in China, it's much of a black box as far as what's really going on. But one of his most recent tweets sort of helps shed some light on it, that it was one group that said something about BTC, some higher head of state said something, and that we'll know in the next week or even month. And it's to the point where not only are the Chinese spooked about it, the non-Eastern people are spooked about it. Huobi's shutting down accounts, saying you can't go long anymore, something to that effect. It's in here somewhere. Stop providing services to Chinese users. So the list of unraveling is more than just, this is people selling because they're panicking. This is people selling because they have to. They really don't have a choice at this point, based on what this is saying. If this isn't accurate, then that changes. But it certainly feels like 2018, late 2018 almost, where we were selling into nothing because people were selling. I mean, when people want to sell, when the whales want to sell, you feel it and you see it. And this is what it looks like. Whales are bad for everybody. And we know why, right? It's great. It feels great when they buy up everything and bring the price up. But for any Chinese miner who is hoarding BTC, it's going to be a problem. How are they going to exit? Where are they going to sell? What are they going to do? All these miners, where are they going to exit? What are they going to sell? Now, we're not necessarily seeing that yet. This is exchange reserves for BTC. We're seeing exchange reserves rise slightly, but arguably, I'd say this is nothing. Maybe it's an amplified effect because everything is in free fall, but it's no higher than it was in February. It's not falling. Their exchange reserves aren't falling, right? This is just me trying to make sense of what's going on here. This doesn't look like mass capitulation either, right? Now, this might change tomorrow, but as it sits here, this doesn't look too bad. If we look at miner outflows, we had a spike maybe a few days ago, but overall, again, we're not seeing the outflows we saw from the Chinese miners in January and February. I think this was one guy, actually, who basically said he has enough BTC to sell for the rest of his life. So we certainly have that to look forward to, as well as these Chinese miners continue to unwind if they choose to do so. And that's the hardest part about all of this, is we don't know what we don't know. And this isn't China, obviously, so I don't know what's actually going on. All we can do is look at the metrics, which can be leading, can be lagging, but to see the next difficulty adjustment flip negative after it was projecting a positive plus 12 to 15%. We were told at the time when this was negative that it was some flood in China, some coal plant. It's just one thing after another, where I'm not confident about anything I hear from China, right? Was this insiders knowing that it was coming on top of something else? I don't know, right? It looked fine because hash rate rebounded. So thus far, it doesn't look like miners are capitulating. That might change in the next week, 30 days, but it looks fine. If we look at the utxos, this is the age of the coins that have moved on chain. We're not seeing a sudden spike of new movements. We're not seeing a sudden spike of new coins moving. The 3 to 6 month coins are rising as far as what's moving on chain. So this is kind of people selling who bought in December to present, basically. December to February, we'll say. So anybody who sort of bought near the top is getting out. That's kind of as to be expected. You're scaring a bunch of people who recently got in, whatever. But again, we're not seeing weirdness on chain in this moment today. That might change in the next 24 hours, but nothing that I can see looks like there's some mass capitulation going on. So little TA things. Let's talk about what went well, what didn't go well. what went well has been this 4-hour alligator fractal. Anytime we are trending deeply one way or the other, quickly, the 4 hours really better than the daily. The daily just looks like a giant red candle, right? But when you zoom in a little bit, you get some context. And we had the Elon stuff. We had some environmental FUD. We had that capitulation on the 19th. And then we were actually looking decently fine. We were actually breaking bullish fractals. We were making higher highs. And then here comes China FUD, which may or may not be FUD. And it's just been wave after wave since then. So thus far, the 4-hour alligator, the 5, 8, 13 EMAs, I've told you this looks bad. It's going to look bad until these MAs flip, until we start breaking these bull fractals. It told you to add to your short here, add to your short here. You get some trailing entries, add to your short here, and it's telling you again to add to your short there. So until we break these levels, until this flips, it's unlikely that we're just going to magically return to any sane level. Realistically, I think this takes us 30 to 60 days to figure out what the heck's going on here. And that may lead us into Q3, which historically hasn't been great. Q2 seasonality has been amazing historically. Obviously, this is a rarity for that. So maybe seasonality is just broken completely, those correlations. But looking at the daily cloud, last video I was talking about this edge-to-edge trade, which I had all plans to enter, and I'm eating dinner, waiting for this daily candle to close. Elon tweets about the environment stuff, and then all of a sudden we get this nuke when I get back to my computer. So I'm like, okay, well, I don't really want to short there because now the risk reward isn't so great for that short. Little did I know, we wouldn't support at the cloud at all. We would just continue to turbo nuke. So when you do turbo nuke down through the cloud, typically you see some consolidation here. We saw this in 2017. This was a 2017 run up, and you had your edge to edge in one day. And then we had 2 weeks kind of just relaxed at the cloud. So I would say this is unusual to just keep going like that the next day. And trend metrics, especially on high time frames, they can't keep up with this, right? You're looking at these specific numbers. I'm looking at the 20-day, the 60-day, and the 120-day. And you're telling me that it's going to magically tell you what's going on when we're down 60% in 3 days. It's just not feasible. So right now, I'm looking at this. The important levels to watch are any mean reversions back here. It is unlikely that we go to zero without some mean reversion first. Just as we need a mean reversion up here, we're going to need mean reversion back here. There's just not enough people to long margin call at this point. You can say people are adding on the dips and they're margin longing, that's fine, but eventually China's going to run out of coins to sell. Eventually bears are going to run out of steam, and the quicker this goes down, the better, because the quicker then they will exhaust themselves. So on top of China, obviously you had momentum traders just adding on to this, piling on. And we had DeFi stuff as well, which I'll talk about towards the end. That didn't help. So anyway, back to the mean reversion. I'm looking at the Kijun. Now this will move down over time. Currently it's at 48, cloud's at 48. And just like in 2018, we had this opportunity post mean reversion to actually break through the cloud and continue on, right? So our first bullish continuation opportunity was above the cloud. That is now obviously gone. Our next bullish continuation opportunity or fresh bull trend will happen just like it did here, potentially, where we get some sort of mean reversion to the Kijun, right? In this case, it took a while to move down. And then it's a decision point. What we want to see if we're bullish, obviously, and this is what, mid-June? We'll know by mid-June, most likely, because that's where the Kumo twist is. But we'll know by mid-June if we actually go above the cloud again. In 2018, where we set up for an inverted head and shoulders, looked great, looked fine, and got denied swiftly, extremely swiftly. So this is something to watch for. How do we react to the cloud? How do we react to mean reversion? How do we react to the Kijun at 45 to 48 or slightly lower depending on where this mean reverts? But those are the levels you're going to need to watch in the next 30, 60, 90 days, whatever it is. As far as what else worked well, the Pitchfork, which tells you when things are overbought and tells you when things are oversold and tells you that this is a magnet for a trend. Pitchfork is currently one of the few things holding us where we are, in my humble opinion. You get a rate of change, and this is just the expectation. This allows you to have price projections on X day, like 33K by July or 80K by May. 80K by May would be us sitting on this midline by a year from now. So unless we fall out of the bottom, unless we go to sub 17K, this Pitchfork remains intact. So talk to me in a year, see where we're at. Are we at 80K a year from now? Let me know. What do you think in the comments, right? You see all these people on Twitter giving me crap for it. Something else that worked really well is the 20-week SMA. The 20-week SMA, historically, if we're below it, we're bearish. We're above it, we're bullish. We closed below it last week. And man, did price know, because immediately we get nuked right after the close on this week's candle. And that's bearish, right? Weekly cloud told you there's some danger here when price was at this level for a mean reversion to 35. We're now below 35. If we dip below the key June, like we did in 2017, then it gets real messy, because there's no support down here, right? Based on the cloud, just like there wasn't here. Now, this didn't drop to 1500 or whatever, but you look at high time frames for support, you zoom out, and when that support's gone, what do you use? You have to use something else, right? That's why you have to lean on stuff like this. Okay, if we drop, what do we lean on? We can look at the yearly pivot at 22K. We can look at this diag at 22K. We can even look at this midline zone or median zone at maybe 28K. But we're at a point where TA doesn't matter until the selling stops, right? Like, clearly it's just busting through every support. Everybody's just selling because they have to. It doesn't matter. There's no buyers here that are going to overcome this China selling right now. There isn't. That's how it looks, right? It's just, the bottom is zero right now. Until then, until China stops selling, the bottom is zero. Something else that worked really well is the 1050 cross on the daily. It'll always look messy until it doesn't, right? And I told you we had a chance up here. We actually had an inverted head and shoulders. I took a long up here, stopped myself out, thank God, up here. And we get this bear cross on the 1050. And that's it. That's all she wrote. So do you expect a bull trend like this every time you get a bull 1050 cross? No. And the same to the other side of it. You don't expect this mega bear move when you get a 1050 cross, right? On top of all of that, we have CME futures contracts, which close, or roll over rather, May 28th. So it's this week where we typically see increased price volatility. Futures have been open for 12 minutes, I believe now, 6:12 p.m. EST. They probably were limit down or something, who knows, but that's going to be a mess for this week, as well as ETH futures, which I didn't map out. But all these contracts since basically December have closed higher. This purple contract is threatening to close lower. This Feb to July contract's threatening a break even, and everything after that's threatening to close lower because it opened higher. So you might say, who cares? Correlations are stupid. This doesn't mean anything. But once we find a groove on these contracts, there typically isn't a reversal. I mean, that's really the big thing that I've noticed. Once it's up, it's up. Once it's down, it's down. Look at 2018. That was one-way highway, okay? Let's go through the looking at Bitcoin stuff real quick. 2-year MA multiplier worked okay. It wasn't enough for me to actually be convinced that we were done up here. And then even still, this looks bad, but are we done? I don't know, right? If we V-bottom to 45K and Walmart and Facebook and everybody's like, yeah, let's buy some BTC, right? If that's the case, which I don't think it is, but if that's the case, maybe we're saved. But this wasn't so great at calling tops. The bottom of that's currently 17.8. And historically, it's a mega buy. Anything below that, that's going to keep moving up. 200-week moving average heat map didn't really help us at all, arguably. We never got a red dot, which is the rate of change of the 200-week moving average. We never really exploded on the upside. We never had this euphoric upside. We had just this 90 days of consolidation. Pi cycle top, maybe this is the one thing. If you're a Pi cycle top maximalist, good for you. You got out at the top. At the time I said ignore it. It's one thing of 10 to 15 things that are telling you we're getting overheated. And I certainly didn't trade it as such. Puel multiple, which is basically how rich are the miners today versus the past year, is currently way down. So this is helping us in the supply-demand perspective, in that miners aren't getting so rich that they feel like they should be selling. If anything, they're just losing these unrealized profits and they feel like they should be selling, or they're in China crapping their pants saying, what am I going to do? How am I going to sell? Stuff like that. This will go even lower today because this hasn't updated yet. And again, historically, buy zone is still quite lower, but it's not even close to screaming. Didn't even get close to screaming. Got higher than it did in June, but nothing telling you you should get out here. Mvrv, same thing. Market cap versus realized cap is basically what this is. So market cap versus on-chain activity. And you can look at that as a multiple. And it's currently dropping dramatically. Again, a ways down to go as far as buy zones are concerned. But it helps you figure out, are we closer to oversold or overbought? And lastly, for BTC, as we transition to our ETH analysis here, something else that worked decently well, arguably, is the fractals, the Williams fractals, as far as stop losses or using them for a trailing stop loss. If you're looking for technicals that helped you, warning signs telling you to get out near the top, BTC broke a bearish fractal of 53. This was that edge-to-edge cloud thing as well. This is the Elon candle. And it had been telling you, be careful up here for the entirety of this consolidation. And the Wyckoff people, the Wyckoff distribution people are going to tell you that this has also told you over and over and over again, be careful up here. Unless we're breaking highs, this is going to break down. Not only that, but we continued to break fractals. Anytime we break candles like this, specifically, this is a spinning top or a long-legged doji, whatever you want to think of it as, where buyers and sellers try to come to an equilibrium despite heavy volatility. We broke that. We get another one. We broke that. We're just breaking everything, right? And then we just puke. So we definitely don't want to keep breaking this. We broke this spinning top today. So as far as BTC is concerned, it certainly sold off less than ETH and DeFi, maybe arguably because it had already sold off and it's not as owned as heavily by Chinese speculators, possibly. And on the ETH side of things, we had a fractal break at 35, basically. So again, plenty of time. There's plenty of things to tell you up here that this isn't looking so hot, right? And again, we have a bear fractal here. So the reverse is true on the way up. If we, just like the 4 hour, if we start to break these bull fractals that will eventually print, hopefully in my lifetime, once we start breaking above those, then you can say, okay, the selling has obviously diminished. That's a lagging indicator, but it's a way to quantify it and objectify it. Right now, we're just in free fall, right? I mean, that's hard to deny. Here's ETH exchange reserves. Look fine, right? Nothing too crazy. This may change in the next 24 hours, but supply demand wise, you'd expect, I guess I'd expect some sort of increased on-chain activity on the ETH side of things to back up this move, because most of this has been spot selling by the seams of it. It's not like we're seeing OI, open interest, rise again on BTC or ETH. I guess this is just people selling what they already had on the exchange. I mean, if anything, this is an argument that ETH could go lower if a bunch of diamond hands get shook and they decide to start sending to exchanges. At what point do the ETH people say, and the same for BTC, but at what point do they say, okay, I'm up 10x, I'll just take it, right? Or I'm up 5x, I'll just take it. Or I'm break even, I'll just take it, right? And that's what you start to see on the way down. You start to see it on the way up. It's going to take a long time for us to break through all this, I think, regardless. Here's the daily cloud on ETH, which is completely destroyed as far as the trend. You had this orderly trend. It was fast, sure. It got a little crazy towards the end, sure. But we had key June bounces. We had the TK lines. They didn't get too spread apart. Everything was fine. And then you get that fractal break up here. And then all of a sudden we just start puking, right? This is part of the China stuff, most likely. So as we sit now, we're above the cloud. This is the 200-day moving average down here. I'll show that in a sec. So we've mean reverted and then some past the key June. This is going to cross bearish on the TK lines. And if you're looking for bull stuff, you want a V bottom here. You want TK lines to cross bullish again, but I think it's most likely this is just going to eventually force itself into June below the cloud. And then we're going to have some sort of interesting bear stuff to figure out. But wow, does that look like a mess. Here's the 4 hour. We can say maybe there's a div here on the 4 hour RSI, 4 hour MACD. There's some sort of falling wedge potentially. It's just hard because the people who've bought the dip, I feel like have already bought the dip, you know? They've bought dips for days and it doesn't matter. It just keeps dipping, right? So unless they are well capitalized and continuing to buy dips, they're just getting bulldozed by the sellers over and over again. So again, I'm not bullish on 4 hour until we're above the cloud. I mean, hopefully that's goes without saying. Same thing with the alligator fractals. We're not bullish until this flips on the 4 hour again. We haven't broke a single bull fractal since May 12th. So we just got successive lower highs over and over again. So until we start breaking higher highs on ETH, you know, there's no bottom. Zero's the bottom, right? People are just going to keep selling. If they've got ETH, they have to sell. If China has ETH, they have to sell. If momentum traders want to get on board with that, right? I don't want to get mega bearish here, but I think in 3 to 6 months, 6 months to a year, we'll be fine in this very moment in the near term. When we have 50% swings intraday, like who knows, right? Just roll the dice. Here's the 200-day moving average. We tap that. This is the EMA, by the way, not the MA. So keep that in mind. The MA is slightly lower. It does look good that we supported off this. It does look good that we saw that China dump and some bullish momentum came back. But this just screams fear all over the place. Here's the 1050, which is just now crossing bearish. Obviously late on ETH, but again, to get the sentiment orientation as far as the MAs are concerned, this you just can't look at this chart and get excited, right? Maybe 2% of the people who missed everything on the upside are excited about this, but I think most people are concerned at this chart. Here's the ETH Pitchfork. Now, do I think it's going to 600? No, but keep in mind when BTC did pull back, this took months, this took years, it did return to that median line when it had its multi-year bullish pitchfork. One could argue that maybe this is just a liquidity stab or something into the pitchfork, which we haven't even stabbed yet. But worst case scenario, I like 600. Okay. Is that crazy? Sure. But I'm not going to rule it out. Otherwise, we need some sort of massive buyback system, something. I don't even know, right? Because this looks just disgusting. If we look at TVL for DeFi, completely wrecked. Part of this is price depreciation, obviously. At the top, it was at 71 billion net. Now it's down to 37 billion net. And all of these taking massive hits. Everybody unloading either forcibly because of liquidations, mainly on Compound and Aave. A few days ago, a large increase as well over the past few days on those platforms as far as liquidations are concerned. So they're either forcibly getting liquidated or again, it's this Chinese news / FUD / secondary effect where everybody's just spooked at this point. ETH BTC Pitchfork performed extremely well. I told you, guess what? Here's the overbought zone up here. Here's the oversold zone down here. This is, again, rate of change, likes it down here. And this chart looks destroyed, okay? Destroyed. It looks reminiscent of any of these rises and falls. You know, maybe you could argue for something like this where you get this secondary push, but in this moment, looks like we're headed back to 05. Now that's where ETH wants to live, ETH BTC wants to live. And lastly, total 2, which is all market cap minus BTC. This is the log chart. Doesn't look so bad. You know, we were in the trillions, 1.5 trillion to 700 billion. But when you turn off log, it is breathtaking. The drop we've had over the past week. You know, this to me isn't a quick recovery, mainly because anybody who was in got liquidated, was in lost half of all their money, was in, wants to sell or break even on any bounce, was in, hates that they ever found crypto, right? This is going to create a really negative sentiment for the altcoin people, especially the newer ones who, got in at the top. And look at this. How many weeks? 1, 2, 3, 4, 5, 6, 7. We've destroyed 7 up weeks this week, or we've destroyed the past 7 weeks. Haven't quite destroyed everything since January, but we're working on it, right? So I don't know what else to say. I don't know if any of this even matters at this point. Some stuff performed really well. Some stuff didn't. I'd watched lower time frame trend metrics because those haven't even yet screamed divergences yet. If we're going back to 2018, we had a very decent case for a falling wedge. We had a very decent case for this bullish divergence on RSI, on MACD. We don't have that yet on the daily. We have none of that. We don't even have that on the 4-hour, arguably. And this was painful, right? I remember living this. This was painful. So we could still see this. And then after that, we saw like 100 something days of sideways, right? 130 days of sideways. The good news is once that consolidation was over, it was pretty obvious that we were going up, blah, blah, blah. But right now we are still in this figuring out phase, right? Where's the bottom? Where is the bottom? So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.